you're a professional?
Are you?
That's it, Clark. Show him who's boss.
Oh, we're all in this together.
Hey everybody, what's going on? And welcome back to the Clark Griswold YouTube channel. Thank you for being here. This is a learning tool video. I had somebody ask me how to play the gaps because when I give you those daily setups that I give you guys and I say if they gap up or down that the triggers they're nullified. We don't use them anymore. So he asked, how do you play the gaps? Maybe a video would help. So I will give you a video. I thought I had one. Even if I did, the audio probably would have been really crappy on it because I didn't have the correct microphone. So let's take a look at that now. This day today, with everything gapping up, is a good way to look at these, and we can look at a couple different things. Now, I don't have any examples per se of gapping down, but it's basically the same thing when you gap up. Okay, so the first one we're going to look at is SPY. Okay, and we're on the one-day chart currently. This is where we gapped up. We opened here. Okay, and the way SPY worked is a lot of times what happens when you gap, you're either going to go up or you're going to crap. Okay, and it's going to go down. So if you think about it, I had option calls in Neo with this gap, and I sold. Okay, so how many other people do you think are selling? So when they're selling, what's going to happen is this thing's going to drop. Okay, so a lot of times when we gap up, the price tends to come back down to fill the gap. Okay, and a lot of times when we gap down, now what happens when we gap down? Well, you see something that's cheap, you're going to buy it. Okay, if something drops 5, 6, 7, 8%, well, it's a good buying opportunity, okay, per se. So people are going to start buying there, and what's that going to do? It's going to drive the price back up. So again, we fill that gap. Okay, now that doesn't work like that all the time, and you'll see some examples here. But you know, it's either going to fill that gap or it's going to continue higher. Okay, so we look at SPY today, and SPY opened up here at 429.83, right at the bottom here. This is where we opened. Okay. So it is still live trading. There's 15 minutes left in the day. But SPY opened here, and then we retraced and we filled this gap right here. And then we trended back up again. Okay, so if we go down to the 30-minute chart from the 1 day, and let's just hop back, and here's our gap. Okay, 7:30 in the morning, that's where we open. Okay, so the way I like to play these, off of the first 30-minute bar, we want to see what direction we're going, okay? And then you can take your plays from there. So this SPY gaps up, we opened here, and we trended up, came all the way up, and then we closed this 30-minute candle here. So now I want to watch the second 30-minute candle to see what that does. And if it goes above this wick, then I'm in this and I'm playing it. If it gaps down, or if it trends down lower, then it's likely going to fill this gap here. Okay, so it did go up. Now I wasn't in on this because I was watching my Neo, and that one made 270%, and I was kind of out for the day on that, except for this trade that I took here. But if we go back, we have to go way back to even set targets, but there is one there. And again, we go back in time, and that's how we set our targets. And again, here's another gap here. Okay, this, what we saw over here today, filled that gap. Okay, so gaps tend to get filled all the time regardless. So again, we can go into the 15-minute and whatever to try and find our targets or our magnitude or our pivot points or whatever you want to call them. So hopefully you guys are still with me so far in this. If you're not, comment down below. and I can maybe help clarify some things on a separate video or on Twitter. So hop back here. Now we have this first target. This green line is our first target, and of course we hit it plus a little more. So if you went back to the 15-minute chart, you would have found some more targets that could have been hit. Okay, but as of now, we took this trade, or you do take this trade. You get in here at 432.69, and it runs up to 434. It's almost $1. So when SPY runs up $1 on option plays, it's a really good play for you. Okay, so you gain probably at least 20% there. At least you're probably in that 20% range. Okay, so then what happens next? We have an inside bar, which is not an actionable signal on its own. Okay, then we have another inside bar. Then we have another inside bar, and I called this out on Twitter. And we're going a little bit outside of the gap plays, but we had 3 inside bars. Okay, so I called it out on Twitter, and I said we have possible 3x inside bars. So I jumped in here. As soon as we cross the wick, I take it. And we hit first targets here. Now that was only 6%. I was only in the play for about 5 or 10 minutes, but it netted me 6%, and then I got out once I hit my first targets. Because I only had a few contracts, but I sold them right off, okay? And I took my profits, and I'll take 6% all day long if I can take that, okay? That's like 620% in a month if you get 6% a day. So anyways, I took this, and then this was actually the real signal that really got you a lot of money here. We had this inside bar with a 2 up, and then we had a Rev Strat. So basically Rev Strat is just a 1-2-2 reversal. So a 1, 2 up, 2 down reversal, and this thing came all the way tumbling down, and you're probably over 100% gain if you stayed in this trade, okay? So anyways, that's the gap on SPY. Let's move on to, let's look at NEO. Okay, so this is the one that I had yesterday. I had calls from the day before. I sold for 20%, and I left a few runners on, and I was lucky enough to have what happened today, and it ran, and I sold as soon as I saw it start to reverse. Just because I'll take my 270% profit all day long. Okay, now did I miss out by not holding? My expiry date's the 18th. Yes, obviously I missed out, but I also made 270%, and I'll never complain about that, okay? So let's get back on this. We're back on, if we look on the day chart, again, here's that big gap from NEO. Let me just draw here so you guys can see it. That's the gap on NEO, okay? So from here to here, that's the gap. Okay, so now if we go back to the 30-minute on NEO, and this is our opening bar. So we opened high here, climbed, and then we started to come back down. And once we started to come back down, that's when I was out of the trade. You know, I switched to the 1-minute chart. I looked for a reversal. I was good with my 270%, and I was out. Okay, some guys might choose to hold based on this, and that's their prerogative. But I'll always take my profits, and those were my runners anyways, so it was bonus money. Okay, I'm just gonna get rid of this box so we have a little bit clearer picture. So this is our 30-minute opening bar. And then we look for the next 30 and what the next 30 is going to do. Are we going to crap, or are we going to continue higher? Now, again, the reason this dropped is because some people were selling, okay? Not everybody sold, obviously, because we didn't grab this gap all day. So what happened was we had an inside bar, and then we took it higher, and then we just kind of chopped around. So realistically, if you wanted to play this, you could have got in here and stayed in up to here. And guys, here's a little secret that I use, and I like to use these signals of when to get out. And if we look here, this would have stopped you out here, okay? Because you would have had a 2 up and then a 2 down, okay? So that 2 down would have signaled a potential reversal, and you should have been out. Now, the other thing you can look at, and it's a little risky, This blue bar here, this blue line, is a 9 EMA. So as long as we stay above, as long as we close, these candlesticks close above the 9 EMA, we're usually in a good spot. And if you would have followed that strategy, you would have finished up here. Or this is still going, but you know, you could have sold up here somewhere. I don't use it all the time. I use it very rarely. I like to use the signals of the candlesticks, and if I'm out, I'm out, and that's just what it is. It's very, very rare that I'll use this EMA, but I keep it on there just for a reference to go back on. So Neo, this is one where you kind of would have got chopped out. You probably wouldn't have made any money, and you would have got stopped out. Let's go to another one. We'll go to Apple. Okay, and let's look at Apple. So Apple, we go on the day chart. Here's our gap, here to here. Okay, this little spot here, top of the wick to the top of this bar. That was our, and you can see this one filled. Okay, so if we go on to the 30-minute chart, and we opened up here, and we came down right away and filled in this first 30 minutes, and we ended up closing up here. Okay, so we fill. Now what happens? Is it a continuation higher, or are we going to go and come back down lower? Well, we wait for that second 30-minute bar confirmation, okay, which we had. And I can draw this for you. We put our trigger right there. That's our trigger, and we're in. Okay, so we would have taken this from 157.50 up to, you know, 158.64 is the high before it started to reverse. And again, you just go back and look for your targets, okay? Here and here, and there aren't, you don't really have any. I guess there's your first one there. So target 1, which we hit, and target 2, right? Why isn't that clicking on there? Target 2. Okay, and then you could have looked for a third one if you wanted, but did we hit both those targets? We sure did. Okay, so we jumped in here on this green bar, hit target 1, hit target 2, and you could have been out of the trade, or you could have carried it on and left some runners and tried to grab something, but eventually, again, you would have been stopped out. Okay, and here's an example of that 9 EMA not necessarily working for you. So if you're following the strat and taking actionable signals off of the candles, we had a 2 up and then a 2 down red. This line here is realistically where if you were carrying a longer trade and trying to stay in it longer, this is where you would have been stopped. Okay? Now if you're following the 9 EMA, this is where you would have been stopped, and you would have been on the losing end. Instead of taking profits or taking a small win, you would have taken a big loss here, okay? So that's kind of why I don't really like the 9 EMA, but I keep it on there for reference. Sometimes I use it, sometimes I don't. It's just a matter of how I think the day is trading, okay? So that's an example of Apple. We gap down, and then we continue to gap back up. And guys, we can look at any one of these. I mean, let's look at MU, for example. And I can go through any one of these and go through it with you. So MU, again, the same thing. We got, here's our, I'll take these lines off for you. Here's our gap right here, okay? Top of this wick to here where we opened up. That's our gap. Now, it didn't get filled today, so we go on to the 30-minute and take a look. And what happens on that 30-minute? We open here, okay? We come back down a little bit and just continues up higher, and then we get this inside bar, and then you can take this inside bar as a play, okay? And then our first target is here. The magnitude and the difference between 79.82 and 79.25 isn't a great target. It's a small price to fill, but you could have taken it and won on it, I guess. But so I'll go through one more here. I'll just pick something random. Again, I haven't looked at any of these. So let's look at space, for example, SPCE. So space, again, here's another gap, as most everything gapped up today, okay? So space, here's our gap here. in between the top of this white bar and here. We go to the 30-minute chart. Okay, and guys, if you're finding this information helpful, please just take some time and give me a quick thumbs up. I'd appreciate it. And make sure you hit that subscribe button, hit the bell. The bell gives you the notifications for when I send out videos like this one, okay? Learning tools, informational videos, daily setups, okay? So let's get back to this anyways. Space SPCE. We had this bar here that opened up, okay? So we opened here, we came down, we didn't fill that gap yet, and then we started coming back up. And then we had this first 30-minute, this break of this first 30-minute bar. So again, I can put that trigger in there for you. And there we are at $7.83. And we went to, what, $7.99, I guess, and a little bit higher than that. To, $7.95, I guess. And then this ended up being a outside bar on you. So again, you would have been stopped out. But there was an opportunity for a little bit of money on this gap. But that's basically how you play the gaps, guys. And again, here's another one. You could have followed this 9 EMA and stayed in this trade, and then you could have sold a little bit higher maybe here, and then taken your stop here, I guess, if you wanted, or you would have taken it down here and lost. So that's the 9 EMA is a little bit tricky to play with, okay? So sometimes it works, sometimes it doesn't. And you can go back in time and look at any of these. So we stayed above here all the way, and you could have taken this, but there also wasn't an actionable signal to say, get out of this trade. Okay, same thing here. You could have played this thing from top to bottom, and this would have been your actionable signal normally to get out. Okay, but we didn't close above that line, so you could have stayed in and again, made a little bit more money, but you already made money here. So take your profits. You can use this as a small reference. I wouldn't be attached to it, okay? I would concentrate on using the signals that the candlesticks give us to trade because it is the easiest method to do it, okay? So guys, that's trading gaps. It's pretty simple. And if it gaps down, it's exactly the same, okay? So when we have a gap down, we're looking for that to maybe hit and fill the gap of the bottom of the previous candle, okay? And then what it does from there is its own thing, and we just have to watch it. I'll see if I can find, I'll go on to SPY. I might as well, we're doing the video anyways. Let's go to SPY and see if we can find a play that gapped down on SPY. I'm sure we have one here, just so we have it. And you guys can get just a reference of how it works. So here's an example, another gap up. This one right here, okay? We gapped down. This is where, this was the low of the day here, and then we opened up down here. So the gap is from here to here, okay? So there's a gap to fill here. So if we go on to the 30-minute chart, that's March 3rd to March 4th. Okay, so let's go to the 30. And what are we, March 16th? So there's our gap play, okay? March 3rd to 4th. And we want to look for that first 30-minute bar, which is right here. Okay, that's the first 30. Now we look for the second 30, and what's the second 30 going to do? Okay, we don't break above, but we break below. So at that point, you can come in this trade. And I'm just going to change this to yellow for reference. So there's our trigger, and we're in the trade, and you can take it. You know, we came all the way down to this 427.84 mark. Okay, so let's go look for where our triggers would be on that now. So you have one here, and obviously, if we're playing the candlesticks, it's not viable for us. So we can just go back to the 15-minute, and we come back to the 3rd or 4th, and still there's nothing. So what I'm going to do is just take this next wick, and I'm going to show you guys something. Okay, so we come back to the 30. We're in February now. Like we can't make this stuff up the way this is working, okay? So we come back and look. Exactly, guys. It tags it Exactly. So these magnitudes or targets or pivots or whatever you want to call them, these are where the bulls have their stop losses, okay? And I look at we're just off, but to a T, okay? Hits that line, hits our target, no problems. And then you can be out of the trade. Now, if you took it beforehand, like if you took your profit somewhere in here, that's great. Take your 10, 15, 20% like I always tell you guys. But that's how you play a gap even to the downside, okay? So it's exactly the same thing. We're buying puts at this trigger, and then we're selling off, okay? And then if you wanted to, you could have played this back up. So we have a 2 down, finished green. So we have a 2-2 reversal. So we reverse all the way up back here, and you would have made a ton of money on this day if that's what you would have, if you would have played just those 2 trades alone. And then you could have played it back down the other way again. And this, guys, this happens all day long. These ups and downs. I know this is a gap video, but man, once you see this stuff more and more and you look at the screen more and more, it's just going to become natural to you guys. It's going to be like writing your name, and you're going to see it. We break down, we buy. We break up, we buy. Look, we break back down, we buy. And it's money in the bank. It's easy money. Okay, like this is a 1 hour trade. This is a 1 hour trade, 2 hour trade. This is a 3 hour trade coming back down the other way, but there's a ton of money to be made in the stock market, and you just need to know these easy systems and strategies to play them, and it's free, okay? I don't ever charge you guys for this stuff. Don't ever pay hundreds or thousands of dollars to pay for this stuff. Watch the videos over and over. Ask for help. Ask questions, okay? We're here to help. That's why I'm here, okay? So that's how to play the gaps. If you had issues with it, give me a comment down below. Let me know. I can help you out. If you like the video, give it a thumbs up, and we will see you on the next one, guys. Bye-bye.